Hey guys, Wave 618 here. In today's Bitcoin analysis, we're going to be largely focusing on the shorter time frame analysis. We've been speaking about this pitchfork that has been holding price really nicely here on the 1 hourly time frame. I believe it is going to give us the map to this very significant level of resistance in and around 30k. We've spoken about that at length in previous videos about why 30k is a significant level of resistance. And yeah, in today's video, I really want to focus on the short term. Yeah, I want to talk about which one of these pitchfork levels is likely to hold price. We'll go into the Elliott wave count. We'll look at some Camarilla pivots also, just to give us a better idea about this potential trade that we have here that looks to continue this very strong move up into around 30k. So if that sounds interesting, stay tuned. Hey guys, so first things first, just want to say a massive thank you to you all for showing your support for the channel. You're continuing to show your likes, your comments, getting involved, and as I say, this kind of thing always motivates me to create more content, so I can't help but continue to make this content for you, and I'm looking forward to a long future ahead of producing successive videos. Now, without further ado, let's jump into the analysis. So basically, since we had this very drawn out consolidation here just under 24k, I mentioned that on the break of 24k there was a very nice run into 30k. Now, how did I come up with these levels of 24k and 30k? It was largely going off Fibonacci confluence levels. Okay, so that is all shown in previous videos. We're largely going to be focusing on the short term here. So following the breakout of this 24k level, we've had this sequence going up, which looks to me as being very impulsive, which makes sense in a bull trend which is going parabolic. You want to be looking for an impulsive count. So I've drawn here a pitchfork, which is basically our first, second and third pivots. It's an original pitchfork, basically meaning that it's at a very steep gradient. Of that pitchfork, we have already hit the upper extremities of it, hitting the upper warning line very nicely, and it was at that point we started to do this drawback. Now, I mentioned previously that I did not want to see us break this lower warning line to the downside because that would invalidate this impulse going higher. And so I mentioned also to my group, I think it was probably yesterday, how it was starting to make its way higher now, and I couldn't see it coming back down lower because that would be invalidating the count. So that was in and around this point here. Yeah, and since then it's actually powered much higher, further to all-time highs. As you can see, we go into around 28.5k, making these all-time highs. Now the question is, does it make another bit of a correction down before going higher, or does it go straight up from here? So first of all, what I would like to do is just show you the Elliott wave count that I'm looking at. So basically I've got this as a wave 1 here going into our wave 2. This is our wave 3. I've got the wave 4 finishing here, and then I believe now we're going into our wave 5, of which we've had a 1, 2, 3, 4, and then we're going into our fifth of fifth. So, and we've been expecting this kind of a move for a good while now. As I say, once we broke that 24k level, the anticipation was that this move up would happen pretty quick because we're going into parabolic price activity. We get those exponential moves in price, so basically price will go up faster and faster as time goes on. So that's why we were anticipating this move all to happen very quickly. In and around this 24k mark I was mentioning, it was likely to happen before the end of the year as we go into the next couple of weeks basically, and that is basically what we're seeing. We've gone up really nicely, and it's making its way to these key levels of 30k. So with that said, I just want to zoom in a little bit on the 15-minute now, and we can just break down this count just on the lower time frames also. So I had this as a corrective move coming down. You could very easily call it a WXY coming down as such, and now it looks like we're going into a new impulsive phase going higher. Now there are multiple ways you can count these this leg up. So personally, if you take the length of this wave here and extend it from here, you can see you hit the 1.618. You can argue the 1.618 comes in and around here. Yeah, so there is an argument that if we just bring on our Elliott wave tags, we've got our wave 1, 2, 3 into here, then you've got a wave 4, which is an A, B, C expanded flat, and now we're going into our 5th, which may already be starting now. So I quite like this count, and the reason I like this count is because it basically means we're not going to come down and take out this low. And I've got a good feeling that we're not going to take out this low at all. Reason being is if we were to take out this low, okay, it could come down and tag the lower warning line, but as you can see, would then be overlapping the wave 1, and I just don't think that's going to happen. As I say, I think we're going to see continued strength come in here. Of course, there is the possibility that the wave 4 may not have finished here. If we shift our wave 3 to here, this could be a more complex correction. It could be, for example, a running flat or even a regular flat. For example, a running flat could make it this ABC count as such. So an A, B, and then C coming down to your lower median line once more. Could certainly do that. Yeah, I'm not saying it can't. And so for me, my stop would certainly be beneath here, and the safest stop really is beneath your lower warning line, because this is the real invalidation point here. Okay, as I say, target that I'm looking at is the target was around 30,300. Yeah, 30,392 exactly. Okay, so that was basically, if you'll have to go off my previous videos where we look at the high time frame counts. That was looking at the Fibonacci projection of the major ABC running flat, where we get that resistance at 30,377. Okay, so that's where I see us going into. But to be honest, you've got to be cautious for all the way between 30k and 31k. As I showed in previous videos, there's a lot of Fibonacci confluence between those two levels, so we could have that drastic pullback in and around that region between 30k and 31k. But for now, there's a very nice clean move that I see on the horizon going up here. Probably quite comfortably to 30,300 in my opinion, but I'll be using this pitchfork as guidance as soon as it breaks down. So if we make that final 5th wave up, the thing that I'll be looking out for invalidation of this move up would be us suddenly dropping, probably initially beneath the median line, but confirmation that this impulsive move all the way back from 24k following this pitchfork had been broken would be coming beneath the lower warning line. That is what would give me the initial warning sign that this was all making a much bigger correction. Okay, so that's what I wanted to mention, just looking at it from an Elliott wave and pitchfork point of view. Now, I just want to look at it with these Camarilla pivots on the chart. Now, again, we're on the 15-minute time frame, where on the 15-minute, each period here will be equal to 1 day. And as you can see, we're going above the R4. So that would be a really good show of strength. And I would want to see us finish the day above the R4. If we do that, I cannot see us can't see us really coming beneath this swing low here at 27,300. Okay, of course, we can't say what's going to happen until the day closes. Of course, we could end up closing the day beneath this level, which would be a little bit of a short-term show of weakness. In my opinion, though, the way it's looking is we finish the day above this level. So that's on the 15-minute. The other key level of resistance that I want to take a look at is on the hourly, and you can see here we are now surging through this very key R3 level, and I mentioned the R4 was a key target to look out for. So again, that's coming into around 30k, where you can see the precise target is like $29,844. So certainly that level seems to offer some degree of resistance, and very often you will get price going a little bit higher than the R4, but eventually closing the week beneath it. So that is the kind of play out that I would not be too surprised to see. But here you can see a very good show of strength as we start pushing above the R3. We went above it here, failed to hold above it, a nice big sell-off, and now we can see ourselves getting back above it. Wouldn't be too surprised for us to see a little bit of a retest of it before going higher. That's another possibility. But as you can see, it's another key level, and it's good to see Bitcoin above it because it's suggesting that we're seeing that continued strength in this market. Now, the next thing I just want to briefly talk about is the correlation that we're seeing here between the dollar and Bitcoin. So on the top here, you can see the dollar. This is the dollar basket, and then on the chart below is Bitcoin. So you can see here we're on the weekly chart on both assets. You can see in the US dollar since March 2020, when the coronavirus really spiked, we have just seen that continued decline, whilst we've seen Bitcoin continually go on this incline here. So we're getting that very, very nice inverse correlation between the two assets. And with that said, we can now take a look at the dollar chart, where we can see on the high time frame, we're on the weekly time frame here. We've got a couple of very key pitchforks that I'm using to map the price action here in the dollar. So here, going back all the way as far as 1985, we've got this pitchfork, which is a modified shift using our first, second and third pivots. And yeah, we followed the pitchfork pretty nicely. In and around 2008, we found a bit of a bounce off of the median line here. And then we've gone higher using the upper median line as a bit of support, and the 1.5 line is now acting as resistance. And the way I'm seeing it is we could very easily come back to this upper median line as we come down here. Now, there is a more relevant pitchfork that we are looking at and seems to be following very, very nicely, and that's this shorter time frame pitchfork where we've got our first, second and third pivots. It's a shift pitchfork, and you can see we've hit the 1.5. The 1.5 seems to be a key level in these pitchforks for the dollar, and yeah, we seem to just be coming down as we lost the 0.5 level. I'm anticipating at least a move down to the median line here. I've drawn these ODB levels, so those are the very key horizontal resistance levels, and if we go in on the daily, you'll see how quite cleanly we lost. So there was a couple of levels here that we kind of went between for a good while. We then used it as resistance as we came down, then temporary support off of this key level. This is at 90, so a nice psychological level, and now we're going beneath it, using it as resistance, which is now looking like it's going to continue its surge down, and I anticipate it going to in and around this 88 level down here. Now, the next thing I just want to briefly talk about is the Bitcoin futures gap. So we've got the Bitcoin futures chart open here, and we're on the daily time frame. As I'm sure most of you are aware, we really gapped up here with the Bitcoin futures. Okay, so there's a big gaping gap here that is very likely to get filled pretty soon, to be honest. You only have to go back and look at previous large gaps that have formed, and you'll see that very often they precede a lot of volatility. So they often form because there's a lot of buying or selling pressure. So the last major gap that really stands out to me is this one here. Really stands out on the chart, and you can see it was just before this major sell-off, which was that selling climax, which actually led to the reversal in trend altogether. So you can see some other pretty big gap. So there was one here, again that was very short-lived, got corrected straight away, and there's a couple here. Again, this was very parabolic price action, and we saw them getting filled again. So we went up here, it got filled, and that allowed it then to go a lot higher, but as you can see, another big gap. And so again, it was just you get these gaps in these final moves of these parabolic moves altogether, and then you often get a bit of a switch in trend, as you can see, filling all of the gaps. So just be mindful of that. We are creating these big gaps which are likely to get filled. The bigger the gap, the more likely it is eventually going to get filled. But that said, short term, we can definitely continue going higher. In fact, over the weekend, we might get another big gap forming as we get that parabolic price action continuing. And then last but not least, I just want to discuss the Bitcoin dominance chart. Now, I've been saying to the group for a while now, if you're going to go long, personally, I'd be more interested in Bitcoin rather than the altcoins. And the reason is the Bitcoin dominance chart is really looking strong. And we saw that when we got this confluence of pitchforks all the way down here. So we got the larger pitchfork with our first, second and third pivots. It's a shift pitchfork that just about held onto the lower warning line here. But it was really better seen off this smaller pitchfork, which held the price action much better. This was drawn our first, second and third pivots using, again, a shift pitchfork. Very nice hold of the lower warning line. And we've gone higher, a little bit of a pullback here, which allowed the alts to really rally. And then we've just surged again in Bitcoin. Now, there was the thought that at this point at the upper warning line, if we go on the daily, that we might see another bit of an altcoin rally as we came down here. But as you can see, it's a short-lived retracement here on this Bitcoin dominance chart, and it just looks like it wants to break out of this warning line completely altogether. So I anticipate that it will break it, and I think that it could easily go up to around 88 here in the Bitcoin dominance. So this may be part of Bitcoin's strength, but could also be part of altcoins actually giving way to the downside also. So just food for thought with regards to Bitcoin dominance. Okay, so that pretty much wraps up the technical analysis that I wanted to give to you in today's video. And now, as we always do, we're going to do the raffle for one of you to win free access to the Juice, which is my educational course looking at the key indicators that I really like to consider when trading. So that raffle is based on the previous week's comments from the previous video. And before we go into that, for those of you that aren't familiar what the Juice is, you can always get more information about that at my website. So this is at wave618.com, where you can see this is the main page, and then you scroll to the bottom, you can see all of my courses. So this is my main educational program here, the Works, and the Juice is basically a condensed version of that, where it's really just focusing on the key indicators, and that's why it really retails at a smaller price. So that is available to you all if required, but this is what is also involved in the raffle for free access. If you are interested in joining the group and want more regular updates on basically the top 15 market caps, as well as access to the Works and access to the Discord, then this is Cryptology. This is my paid group that you have the potential to join if you're interested. So with that said, we can now go over to the raffle, where we've already put the URL in. We've already retrieved the comments. There's 47 this week, pretty similar to the last video that we did, and then we can start our raffle. All right, so this video's winner is M70. So thank you for the kind comment, great video. And yeah, just send me a email. Email, as I always say, is in the description to the video. And yeah, I'll send over your free access link to the Juice. All right, guys, I think we're going to wrap it up there. So take care.